Hi fam, welcome to the Money Space 101. I'm Angelina Sonoche, and this side we are building generational wealth together. So you probably saw the title, Invest 3,000 per month and retire with close to 16 million rand. Now we're not talking about you becoming a millionaire. We're talking about you becoming a multi-millionaire by the time that you retire. Okay? So you better tune in because this one is a must watch. This one is a must take notes. So you better take out that notebook right now, start taking those notes and basically follow through with this video. So before we get into that, please do follow us on social media platforms, and you can find us at the Money Space 101 across Instagram, TikTok, as well as Facebook, just to further engage with us through our short reels and basically through our weekly post as well, just so that you further engage, someone just to keep you accountable to you actually achieving your financial goals, because we want to achieve them, but for us to achieve them, we actually have to take necessary steps on a daily basis to help us get there. And the Money Space 101 is basically going to help you in equipping you with such skills. So let's get into the video. So the title, investing 3,000 rand per month and retiring with 16 million and retiring with close to 16 million rand tax-free. That's the key. Let's start with the tax-free part. So tax-free, it is basically then you're going to invest in what you call TFSA, which stands for tax-free savings account. So basically this type of investment, it allows you to invest into it, and then you are not going to get taxed at all. You're not going to get taxed on the growth of your investment. You're not going to get taxed on the returns of the investments. You're not going to get taxed on any interest that you receive on the investments. You're not going to get taxed on the dividends that you receive from the investments. Sounds too good to be true, right? I know, but yes, it's real. I'm not capping. You probably saw this somewhere, so this might be like the second time you hear of something like this. So in this video, I'll basically be breaking down how this actually works and basically the calculations that go behind it, because we always hear of things such as compound interest, investments are better than savings, but we don't actually maybe get into how does it actually work. How do these investments actually grow to be way higher than if you would have just put this amount in a savings account at your local bank or whatsoever. So in this video, I'll then be showing you a calculation breakdown of how they basically get there. So without wasting any time, let us get into the video, as I will be basically going through the calculations. You will also see it on your screen so that you can follow through with me and basically to understand more how to get to close to 16 million tax-free. So as I said before, we are basically assuming monthly contributions of 3,000 rand. And that is my P. And then for the interest rate, now just for the interest rate, I'm going to just shortly get into short explanations of this. And then let's assume in this case we are using 12% as our average, and I will explain shortly why. And then basically for this one, then we are going to say 12% divided by 12 months, and then this gives us 0.01. So the reason that I use 12% is because in this case we are assuming that we are going to be investing in the tax savings account using the MSCI World ETF. So MSCI World ETF basically allows you to invest into the global markets. One of the perfect ways to sort of leverage, the rand depreciation or whatever fluctuations in the future. That way then keeping your investments able to fight against inflation. Because if you're only going to focus on the local markets when you're building your TFSA, then you do stand a risk then of not being able to fight against inflation that's going to happen in the future. And remember, we are investing for the long term, so you need to consider such things when you are choosing your investments or the ones that you're going to include in your TFSA account. MSCI World, it performs at generally 14% over the past 10 years. Just to be safe for this video, we're just going to use 12%. Right? Now, let's say, for instance, you are 30 years old right now. So you want to start investing toward your retirement. So if you're 30 years old, then you are planning to retire at 60 years old. This means that you're going to invest for 30 years. So let us get into that. The number of duration equals to 30 years and equals to 30 years. And then remember one thing about another thing about the TFSA is that the lifetime contribution limit, it is 500,000 Rand. I will shortly explain that. It is 500,000 Rand. And then the TFSA annual limit, it is 36,000 Rand. That is 6,000 Rand. So this basically means that for you to basically qualify for this TFSA, you need to not surpass 36,000 Rand in a year, meaning that what you contribute towards this type of investment, it should not be above 36,000 Rand. And then over the lifetime limit, it should not be above 500,000 Rand. So this means then for the first year, it's 36,000 Rand. Whether you're going to do it per month, as I said in this case, is per month generally, because every month 3,000 Rand, then it means that by the end of the year, it would be 36,000 Rand. So you can also do it once off, or however way that you are comfortable with, as long as from January to December it does not surpass 36,000 Rand. And then now if you're going to invest over time, you're going to then multiply those 36,000 Rand with the years, and that will then give you how many years it will be for you not to surpass 500,000 Rand. Step 1, how many full 3,000 contributions before getting to 500,000 Rand. So right here, we're going to say 500,000 Rand divided by 3,000 Rand equals to 166 for months. Right, so 166 with like commas behind, but let's just assume we have 166 months multiplied by 3,000 Rand, and then this is going to give us 498,000 Rand. So now we still have 2,000 Rand to hit the 500,000 Rand lifetime limit. So which means then for the remaining month, it is going to be the 2,000 Rand. Rand, it's going to be 2,000 Rand, and in that way we have maxed out our potential contribution limits. So this means then for 166 months in our investments, we're going to be investing 3,000 Rand, and then the one final month, it's going to be 2,000 Rand. So then this gives us a total of 167 months, which if we take it 2 years, it is basically 13 years and 11 months, which is 13 years and 11 months. So this means then if you're going to start investing into your tax savings account, you know that you are investing at max 13 years, 11 months to max it out. You cannot invest above that. The moment you invest above that, please know this, you are going to be taxed, and taxes are very hefty, so it can be over 40% of your of how you are taxed then, if you're going to go above that amount. So please make sure to stay within the limit. And then now we're going to calculate the value after 167 months of contributions. So we're going into our step 2. Step 2, guys, I know I probably have the worst handwriting, but yeah. When I was in school, I used to have actually good handwriting. I don't know what happened. I think because I've been in school for such a long time, I really stopped caring about handwriting, because I was like, handwriting is not the one that's going to give me distinction, so why do I really care about that so much? So yeah, I think that's literally what happened. So here when I find the future value of 3,000 Rand per month for 166. That 166, I can't even see it properly. So let me just erase that. 166 months at 12% divided by 12. That's the monthly return. Okay, cool. And 12% divided by 12, that gives us 0.01. I generally write it like that because then it's just going to be much more simpler when we integrate it into the formula. And the formula is as follows: FV, which stands for future value, equals to P, which is principal amount, multiplied by fraction fraction. Now the denominator is 1 plus the rate to the power of the term minus 1 divided by the R. This one is the same, so whatever value that goes here is also going to go here as well. And this is this right here, right, equals to R. And then right here, we are going to write 3,000, which is our principal amount for this calculation, multiplied by 1 plus. Then for the N, it's 166 months, because remember, the first one, 166 months correlates with 3,000 rand per month, minus 1, then divided by 0.01, then that's going to give us a total amount of 264,837.707. Probably wondering, why did I do this? This is because this is not the final amount for what we are going to find. We are not going to write it as 71 cents, for instance. That will basically hinder us from getting the most accurate answer. So write all decimals as they are from the calculator. And then now we're going to go to part B. Now that we found this amount, now we go to part B, and part B is where we add the final 2,000 rand contribution, which was only for 1 month. So formula for here, future value equals to the previous amount, which is 1,264,837.707. Then we multiply it by the 1 plus R, which is in this case 1,01, right? Then we're going to add this total with 2,000 rand multiplied by 1. So the same thing, then we're going to add the two totals, and that's going to give us an amount of 1,279,506.084. Okay, cool. Now we're done with step 2, then we're going to move to step 3. And for step 3, we want to let this amount now grow for the remaining amount. Remember what I said about the tax savings account? So which means that by this amount, by this time, you are done contributing, right? So you're only contributing for 13 years and 11 months. Remember, you're only contributing for 167 months, which is 13 years and 11 months. So which means here you are done. So now you're going to basically let the amount grow by itself. So coming into step 3, which is we let that amount grow for the remaining 16 years and 1 month. Remember, if something is going to be for 13 years, 11 months, right? Remember, we're doing this for 30 years. So if it's 30 years, from 30 years to 60 years, that's how I got to 60 years. So 6 minus 13 years, 11 months, it's going to give us this right here. So that's where I got that. And then now we want to equate this to months. So 16 years, 11 months is basically going to be 16 years, 1 month is then equals to 193 months, because we need to have this in months when we take it to the formula. So now we're going to the formula. It's going to be the future value equals to this total that we got right here, which was 1,279,506 and 0.84. Then we are multiplying that with 1,01, the 1 plus the rate to the power of the months, which is 193. And this then gives us 8,644,760, right? So which basically means that the gross amount that you would have, because remember the contributions that we made are 500,000, right? So you basically would have made a profit of 8,144,760 rand. So this is if you start with your TFSA by 30 years old and you plan to retire by 60 years old using the MSCI World ETF at a 12% average, but assuming that interest rate. So now coming to the headline of this video, which was investing 3,000 rand to get close to 16 million rand. This is how. Now let's say that you are in your 20s and you're in your mid-20s. For instance, you are 25 and you want to start with your TFSA. So if you're to start right now with your TFSA, if you're 25 years old and you want to retire by 60 years old, meaning that you are investing that just 35 years in this case, so then this is going to make it. So this one, it's after 30 years and then now we want to do for 35 years. So 35 years, starting at 25 years old, and then this is going to give you an amount of 15,704,908.30. You see what happened? This is basically close to double the amount, right? Just 5 years difference between the two, but it's already like close to double. So this basically then shows the earlier you start, the better. So which means for you to get to the same amount, if maybe for instance you had started at 30 years, it means that you would have to retire in 35 years from then. So this is the equivalent of investing for 35 years, and this is the equivalent of investing for 30 years in the TFSA. Yeah, hope that made sense. So the battery from my camera literally just shut down. So now I've moved to taking this video with my phone. As you can see, like from the calculations that you just saw right now, literally if you start investing from 25 years old and plan to retire at 60 years old, you would basically have close to double the amount you would have had if you had waited 5 more years and started to invest at 30 years old. So which then further shows that the earlier that you start investing, the better it is for you. So basically, let's say for instance, okay, fine, it's too late, you're over 25 watching this, and maybe you're in your 30s. So then, which means then for you to get to this amount, which is close to 60 million rand, you would have to invest for 35 years, meaning that your retirement date then would have to extend. It's not the normal gonna be 60, right? It then would be, for instance, 65 years old if you start investing when you are 30 years old. Then that would cover 35 years. If you are 35 years old right now, then which means then you would have to retire at 70 years old. Do you get what I'm saying? So technically no, because obviously you would have been laid off by work by that time. But what I basically mean is that you would then have to wait for this amount to mature at that time, so that you basically get around the same amount. So if you want to start investing into this, please start immediately, because as you can see from the calculations, it's compound interest, right? The earlier that you start, the better it is for you. So please do let me know in the comment section if you'd like for me to maybe like get into where you can get a TFSA, the option that you have as to which platform to use, how to open it, how to basically maneuver around it. Also, I mentioned the MSCI World ETF, which is one of the components that you can use for your TFSA, and many other components basically that you can basically use into this TFSA. So please let me know in the comment section if maybe you would like more information around the logistics of all of that. And please let me know also what you thought about this video. Don't forget to hit the subscription button and also the notification bell to receive notifications from us when we release a new video. Start investing now and enjoy the compound interest of tomorrow. Bye. See you on the flip side of wealth.